Since the start of May, what have we noticed? The VIX, the fear gauge of the main markets, has been coming down. Bond yields have been coming down. The US dollar has been coming down. Gold has had a slight uptick, but the major recipients of this negative momentum inside the fear gauge, the bond yields, and the DXY has been crypto, especially Bitcoin. And of course, Bitcoin cannot escape the stock market's gravity. The stock market has been enjoying it also. And people were saying, sell in May and go away. Well, financial markets are incredibly complex. They don't rely on just simple sayings like sell in May and go away. That's pretty nuts, so please stay. We've also seen the price of oil has been coming down. This is really good because the price of oil is inflationary. How are the futures reacting? And more importantly, why do we care? Because when the futures go up, that places positive price momentum across global market indices. When global market indices are going up, such as the ASX 200, the Nikkei 225, the DAX, the Hang Seng, what happens to people? Well, they get pretty excited because they buy on green. Looking at the top cryptos, we can see that we had this big sell-off coming into May as everybody said, sell in May and go away, and so they ran. Only to sell at the bottom. And what's price been doing? It's been coming up. Being mindful of what other people say is of course incredibly important, but make your own decisions when you come to buy and sell. After all, you're the only one who can press buy and the only one who can press sell. Looking across the top 8 cryptos, we can see Bitcoin has been doing really well, and that blue line is Bitcoin's gravitational pull. Look at what it's done to ETH. It brought it into confluence, and now ETH is following Bitcoin's gravity all the way up. Binance Coin just a little bit weaker. Solana is looking good, but there could be a degree of profit taking. Well, there is a degree of profit taking at the moment. But one thing that we notice, the structure on BNB is a little bit stronger than what we're seeing on XRP and ADA, as well as SHIB. The meme coins have been doing incredibly well. People are likely to rotate out of meme coins into other projects. Just keep this in mind. This doesn't mean you should abandon your meme coin projects. It just means the relative percentages could be better on other projects because the memes have run really hot. One thing that you might like to keep in mind, when Bitcoin does a correction, it's not a bad idea to keep your eyes on the meme coins. The meme coins have been doing incredibly well. Also, if you're trading a large account, the meme coins are really quite good because there's incredible liquidity in them. And of course, when I'm talking about high liquidity, I'm talking about the top meme coin projects. After the halving, we saw a little bit of price increase, and then from the top or the high of the halving price all the way down to the low, we've seen a near 14% decrease. Notice this, on May the 1st, that actually pinned the bottom of Bitcoin, and of course pretty much the alts, and it's been retracing ever since. Having been inside financial markets for nearly 4 decades, one of the things that I would really strongly recommend that you do, when somebody says, sell in May and go away, say, how did you get that quote in your head? Well, it came from the loving arms of the institutions, didn't it? They have the media reach to say, get out here because we want to buy. So, go away, please. One of the most important things that we can do is look at the structural levels on Bitcoin. We need to understand where Bitcoin could be going to next. Let's pop on the indicator to see what's cooking underneath the market structure of Bitcoin. Understanding market structure is incredibly important. We can see currently that Bitcoin has bounced from this literal 63,700 level. Bitcoin is currently 63,817. We've seen these structural levels to be very powerful in determining where price goes. If it can't get above, it's coming back to the ones below. Price is always moving in a wave, so you want to take advantage of these down waves so long as you know the direction the price is going. The bears will be seeking to take Bitcoin's price down to that 63,200 mark and then down to the 62,180. Always remember, price is always moving in a wave. It's always going up and down. Even in a downtrend, it will come back up. If it tests a level of support and it confirms it, it's seeking to go to the structural level above. If it confirms it again, it's seeking to go to the structural level below. But if it fails to do so, it's cutting through a structural level and seeking the one below it. You can see it plays out with great regularity. The bulls will be seeking to take Bitcoin's price up above that 64,200 and then to 65,000. Don't forget, confirmation of these levels is quite important to give Bitcoin the strength to go up. Now, why do we care about what Bitcoin is doing? Most people would say, especially those that love the meme coin projects, and they're not bad to get into, but they would say, I just can't afford $63,812. I can't even buy one Bitcoin. Your quantity of ownership is utterly irrelevant. Sacre bleu, Ken, what are you saying? The quantity of ownership is irrelevant. Well, it is, absolutely. When it comes to any financial instrument, what you're after is something that's going up in value. New traders and investors are always caught buying low grade, very cheap stuff, especially in the stock market. And when they do so, what are they doing? They think that the quantity will make them rich. Hey, look, it's 0.0000182 and it's going to go to $1. Yeah, not so. Because what actually occurs inside financial markets, market cap will limit the uptake of your particular project. And that's inside the stock market and inside crypto as well. We talk about this inside the masterclass. It's a really important understanding. We also need to look at total crypto market cap because total crypto market cap is how the entire crypto industry is moving as well. So let's pop on the indicator and check it out. If you would like the indicator, you can just go to ctksmethod.org. And you can pick it up there. What we can see in total crypto market cap, all of these structural levels are very obeyed. This is the world's only leading indicator of price. For example, when total crypto market cap was coming up to this structural level around $2.312 trillion, this was reasonably heavy resistance that's been hit in the past. And people know that these structural levels will hold for the duration of 1 month. And that's why the indicators are updated monthly. It has to do with objective dynamic market structure and also the way that the market is looking at specific projects. You can see just how well these lines, these structural levels, just reflect price action. And the way that you use it, if you see total crypto market cap coming down and falling down through a negative fresh air gap, you would expect it to be held by the structural support level below. The thicker the structural level, the stronger it is. The more clustered they are, the stronger they are. You can see this one is a lighter one than this one is a heavier one. This one is a bit heavier and this one is a bit lighter. It all makes sense when you do level 1 and level 2 standard certification, which helps you to draw these lines for yourself. But if you're time poor, you can just use the indicator. If you've been following the channel for any period of time and seen my trades, I'm a liquidity provider on different exchanges. That means I lean in very, very heavily. We're talking about $20,000 per level. I'm not a small trader, and that is at spot. So what I do, I look at these levels in confluence with each other. For example, total crypto market cap came up to this level. That would be a level that I would be selling out of different positions and seeking to scale back in at lower structural levels. Let's have a look at what this looked like on Bitcoin. The truth is, no alt can escape Bitcoin's gravity, but Bitcoin is impacted by total as well. So you need to gain your strength to look across different charts because they all tell a picture and they all tell a story. You can see Bitcoin's structural support level just actioning in here. And you can therefore see the structural level actioning inside total crypto market cap. You can make really good returns on something like Bitcoin, but you can make even better returns on the top tiers. That is, the top tier cryptos. But you must have the knowledge of how to interpret structural levels if you want to be more of a financial blessing to yourself and those you love. You can't just gamble away and say, I'm just going to whack something in right at structural resistance and I believe it's going to go up. A lot of people just look at recent indicative price and say, there was a structural level there. No, there was not. There's a recent indicative price or RIP level there, not a structural level. These structural levels are born from the analysis of all price action. In this case, total crypto market cap, 3,700 days worth of data goes into putting in these lines. Now, why do we put so much effort into understanding these lines? When you're like I am and you're putting a fairly large amount of your cash up each time you go into the market, you sure as hell better know what you're doing. In order to get to a large account, you must manage your small account first. That is why it's vitally important to know the structural levels of the Tier 1 charts, and these are the engine of financial markets globally. If you don't know how the major indices are going, how the fear index is going, the flight to safety is going, the risk on or risk off activity is going, the geopolitical tension, the oil or inflationary tensions, what about the bond market, and what about yields, and of course total crypto market cap. If you don't know these things, you're pretty much guessing on what's going to happen. And there's two ways to look at it. One is directionally and one is relativity. But the most important thing that you can ever look at is structure. It's unequivocally the most important thing. I'm not an academic about what I'm sharing with you, and the reason that I'm sharing all these insights from nearly 4 decades inside the market was that I was really ill, in hospital, given 3 months to live, and I said I want to share my knowledge with people out there. I don't want it to be lost forever. Unfortunately, a lot of people live in the concept of scarcity. They say nothing is new in the world. That's absolute rubbish. The world is always changing. They also say nobody would ever share anything with you that was really truly valuable. They'd just keep it to themselves. This is thinking that occurs inside Zone 1 and Zone 2. Zone 1 and Zone 2 thinking make you poor, unfortunately. It is Zone 4 and Zone 3 thinking that makes you wealthy. And the difference between these two zones, Zone 1 and Zone 2, and Zone 3 and Zone 4, is the difference between scarcity and abundance. You'll find that highly successful people are in the main, very generous, and they want to share with others. Inside Zone 1 and Zone 2, people just don't believe that is the case because they're in scarcity. Their mindset keeps them just wanting and wanting, but not accomplishing. For example, one of the things that you must get over if you think this way is the concept that in order for you to win, somebody else must lose. As the human race is by nature very generous and very kind, the concept of you winning at another person's loss will absolutely and utterly make you a failure inside financial markets. I'm going to turn this over to a Nobel-winning economist, Milton Friedman, and in his words from 1980, and a big shout out for Atipi Computers for sharing this with me. You're going to see how he says that kind of thinking is absolutely and unequivocally wrong. I've said it for many, many years now on this channel. We abide by the abundance method of thinking, but I'm going to let Milton do the talking.
The essential idea of the price mechanism is that both parties to a transaction can benefit, provided it is voluntary and not coerced. There's a terrible tendency, and most economic fallacies derive from that tendency, to think of everything as what the game theorists have come to call a zero-sum game, to think there's a fixed pie. And if I get more, you must get less. If somebody was able to make a fortune for himself, he must have done it by grinding under his heel the poor people, because the pie is fixed and he takes a bigger part. The great insight behind the free market, the great insight of Adam Smith's great book, The Wealth of Nations, was that it is not a zero-sum game, that it is possible for both people for a transaction to benefit. It's very easy to see that principle operating if you think of two people under any circumstances making a voluntary deal. I'll trade my penknife for your roller skate. Clearly, that isn't a deal unless both people are better off.
There you have it, from the words of Milton Friedman, an award-winning and Nobel Prize-winning economist. He said that it's not a zero-sum game, and if you want to see actual profits and actual trades that I made, please look at How to Trade Dips and Profit Skills. They'll give you a bit of an insight. I'm not academic in what I'm talking about. I'm inside the markets. Inside the service, the CTKS structure has been revealed on the S&P 500, the NASDAQ, the DXY, Bitcoin, junk bonds, the US 10-year, total crypto market cap, Ethereum, Binance Coin, XRP, Doge, and Solana. If you're not seeing the latest indicator, just delete it and re-add it from your private invite-only scripts. That is, delete it from the chart or close it on the chart. Always close, then re-add. There's another barrage of releases coming out today. If you're a member and you haven't applied for the indicators, please make sure that you go and fill out the form. Just go to Bitcoin and watch the videos there. That is, inside the service. If you would like to learn how to apply the CTKS method to your chart, I'm going to be awarding a very limited number of partial scholarships. To see what's inside CTKS method, standard certification, level 1 and level 2, you can just go to ctksmethod.org. Just click on the standard certification button and then you'll be taken into level 1 and level 2 standard certification. One of the fantastic things that you will learn in level 2 standard certification is the capability to draw what are called CTKS method paths. I just want to show you a little bit about that. A CTKS method path predicts the price at the end of the month. These paths are always drawn at the start of the month and project a month outwards. They're not trying to predict the path of price, and sometimes they do so, but they're trying to predict where price will actually get to at the end of the month. This is incredibly important information, and it's all based not on speculation, but on an understanding of CTKS structure. I do these paths on all the Tier 1, Tier 2, and Tier 3 charts inside the service. Now, why is it important to understand? These are normalized price paths. This means that if Solana acts normally, we would expect it to close out when we were looking at last month's behavior. Or I should say, in March, we would expect it to close out at this point, and we can see that it actually did. But if people were expecting a follow-through on Solana, but the negative price momentum was within Solana's price chart, we have to look at the reality of price. Even when it diverges quite wildly, it typically ends up at the normalized price path end. Because these paths are all about CTKS structure, they're not about predicting the actual price per day. They're all about predicting the price at the end of the month under normalized price conditions. How do you use this kind of knowledge? Well, you can see if Solana was going positive and then last month it went actually negative. And a lot of people would have expected that this positive price momentum would just follow through. But looking at the positive price path, it never happened. Solana didn't get up to this positive price path. It was under too much sell pressure. The reasoning and logic for that was not found inside Solana's price chart. Remember, what I do inside the market, I will lean in at $20,000 per level US. At spot, not leverage. So I need to know where things are headed to, and I love trading Solana. Solana is really cool. When you get a big diversion from the normalized negative price path, you can take advantage of this because it should come back to it. But of course, we must cross-reference all the Tier 1, Tier 2 and Tier 3 charts, and not all of the price paths will close out so perfectly, but it is quite good. If you get a particularly strong either negative or positive momentum inside the normalized price paths, for example, if we go back to March and Solana was just up here, what it typically means is that it will continue. The same is for the negative side. If it comes down really harsh at the start of the month, it is likely to continue negative. These are really good things to know. When you're putting your hard-earned money on the line, you better know it. That's why getting the capability to draw these price paths in is a very powerful skill. And if you would like to see the price paths of Solana, I will be releasing a video after I've put out the express indicators. When you're looking at things like this, you may think that I alter the price path throughout the month. I do not. I just do the price path and then I let it roll. Gaining this kind of knowledge requires Level 1 certification first, and then Level 2 standard certification second. I will be offering partial scholarships, so if you're interested, please reach out to me on Twitter, and you'll find the link for my direct message in the description of this video. Unfortunately, many traders and investors think that the markets are a zero-sum game. They are not. Milton Friedman explained why. You're entering voluntarily and you're better off, and the other person is better off as well. When thinking in terms of competition and scarcity, we're in the lose money rule zone. When thinking from terms of abundance, we're in the make and keep money rule zones. Please let me know in the comments, what do you think about the zero-sum game? It's a really good thing to discuss. You can either talk about that or abundance. Because having an abundance mindset is so incredibly important, you literally can't operate inside Zone 3 and Zone 4 without an abundance mindset. Have a great day or night ahead, my friends, and remember, opportunities in life reset daily. It's not about mistakes. Mistakes don't exist. We are dedicated and committed. We either win or learn and never blame. Therefore, mistakes don't exist. Everything is just a learning opportunity. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.